Alrighty guys, welcome back to the best investing money management channel on YouTube. In today's video, we are going to be talking about the one, the only ticker symbol ATXG, and we're going to be covering why this stock is up 9,000% and should you buy, sell, hold. So I hope you guys enjoy it. If you guys get anything in value out of this video, hit that like button, subscribe. If you have any questions, let me know down in the comments. So let's start all the way back in the beginning. This is a recent IPO, so this is pretty much when the company goes public, allowing the public to invest into this company. It IPO'd right here at about $7.50, and you'll notice pre-market it was trading pretty heavily, where the stock went from $7.50 all the way up here to about $90, sold off a little bit, and was kind of consolidating around $20 to about $35 a share. It consolidated, and then we just slowly had just a ton of buying pressure step in, where the stock within the next couple of hours was at $23. Then it was at about $410 a share. So the first thing you have to realize is when a stock is creeping up that high, the train already left the station. Each time the stock goes up and up and up, why would you want to buy a stock that's hitting all-time highs, right? And then before you know it, it hit $1,200 a share. So the first thing I always think of, why would you want to buy this stock, right? This company at the time right here, if we go ahead and look at it, is worth about $17.5 billion, which is a lot of money. On top of that, if we look at this is called a price to earnings ratio. Pretty much anything over about a 30 is considered a growth stock. Tesla trades at about a 700 on the price to earnings. This is at 164,000 for the price to earnings, meaning this thing is way overvalued for the market cap in revenue. Personally, guys, this is a stock that right now is very, very risky. So getting back to that market cap at $17 billion, let's compare it to that revenue. The last revenue here for annually here in 2021, they brought in $24 million, which seems like a lot of money, and it is, but don't get me wrong, it is not worth $17.5 billion. Trust me, it is not worth it. On top of that, everybody has this main question of, Carter, should I buy ATXG? The stock's going to hit $2,000. Well, it easily could. The issue I have with it is each time this thing is going up and up and up, the risk is going up and up and up as well. Personally, what I think will happen is in the next week or so, we're going to get so much sell-off from this stock, I could almost guarantee it. But the issue with it is right now a whole bunch of sites like YouTube, Twitter, Reddit are trying to pump this stock up because everybody has been slowly buying in, at 100, at 500, some people at $1,200 a share. So these people that are buying in that kind of miss this move right now are going to still try to pump the stock up so they can sell their shares for, most likely to break even or some sort of profit here. But given the stock after hours has sold off from about $1,200 to $500, I think that's just the start. I think we'll get some selling pressure back down to about $100 to $200. Right in this range is where I think we'll have some sort of balance, where we'll get some selling pressure, some buying pressure, and just a lot more consolidation. But answering that question of why this happened, this happens from time to time with IPOs. It's called an IPO breakout. One of the stocks we saw it with was with NIO, ticker symbol NIO. And we'll actually go ahead and we'll compare what happened to that stock into what's happening here. So if we go ahead and we zoom out, right, you'll notice way in here, we had this stock pretty much IPO right here at about $5. It squeezed up to 13, which doubled, the money. It's not as big as a move as, ATXG, but before we know it, just as fast as the stock went up, it came back down, and then it consolidated back down to levels that was a lot more, achievable and realistic for NIO with the revenue, with the earnings. I just think right now ATXG is way too risky. If you're a beginner trying to trade ATXG, I would stay away from it. I think it's way too risky as a short-term opportunity. It's going to be way too hard to swing trade it. It's going to be hard to day trade it. On top of that, what it has is something called a circuit breaker halt. Pretty much what this means, ATXG, XG. Pretty much what this means is the exchanges, they go ahead and they halt a stock, right? You'll notice right in here where it just has dotted lines. This is when the exchange pretty much halts this stock. And the reason why they do this is to prevent these massive run-ups, right? Where the stock just goes pretty much, kind of just like this, but they pause it and they say, okay, we cannot allow any buying or selling pressure. And when the thing opens, most of the time we'll have a lot more buying pressure that was entering in on the position. So it squeezes up and then it halts. Then it squeezes up and then halts. But also what you'll have is the complete opposite, where it halts and then it tanks down. It's very, very risky when you come across these circuit breaker halts. Personally, I stay away from them. I find them very, very, risky to trade and swing trade and invest in. So answering that question, I am staying away from this, and I would advise you to do the same. And yeah, you can make some money possibly day trading or swing trading this thing, but it's gonna be very, very risky, and personally I am staying away from it, guys. So that is it. Hope you guys enjoyed it. If you did, hit that like button, subscribe. We'll see you guys later. Remember to stay happy, stay positive, and stay safe. Take care, everyone.